Yeah, term deposit rates have just been hit pretty hard of late. Over the last 2 or 3 years, we've been extending out a lot of our clients' term deposits for 3, 4 and even 5 years. And while it's never been a natural thing to do to push out term deposits for that long and lock up money for that amount of time, we were doing that with the thought that in time interest rates may come down further. And of course what we've seen with the Australian economy continuing to weaken and unemployment continuing to rise and interest rates coming down as the Reserve Bank tries to prime the economy by bringing the interest rates down, that will get people more active in terms of spending and building houses and keeping people employed. So as the Reserve Bank have brought interest rates down, that has brought down the rates of return for term deposit holders. So it was only probably 2 or 3 months ago where a 5-year term deposit we were getting around 4.1%, and now I look today we're at around 3.2%. So that's a significant percentage drop in your interest rate. And when you think about those very conservative investors that only invest into cash and term deposits, can you imagine $1 million invested at 6% brings in $60,000 per year. That same $1 million now invested at 3.2% is only bringing in $32,000 per year. So nearly a 50% drop in income, and that's where people start to eat into the actual capital of their term deposits. And that's all, as we've always said, been one of the risks of being too conservative and investing into cash only, that it doesn't keep up with the eroding effects of inflation and that the cost of living, and the income can be extremely volatile, and we're just seeing that now, and it's flowing through to investors. The timing of this, how long it may last, look, we don't know, but I think over the next 5 to 10 years things will be low interest rate environments for quite a few years to come. So yeah, that's what's happened. We need to get used to a very low interest rate world.